Let's talk about the rupee now, which rose for a third straight session, its biggest winning streak in over a month. Strong capital inflows helped absorb steady dollar demand from the oil refiners. The rupee gained support from a late surge in the euro, which hit a session high in the European trade after good demand at a Spanish bond auction. Capital inflows into India's outperforming stocks, which are at $1.4 billion this year already, adding to a robust inflows of over $24 billion in 2012. This has helped the rupee mitigate some concerns about the current account and fiscal deficits, which would have been a constant bugbear for the currency. There you have the rupee, 0.5%, nearly that much of a gain coming in today as well. 54.56 is where it shut sharp. Let's also get in then Mr. K.N. Dey. He's Director Basics Forex, and he joins us live on the show too. Mr. Dey, hi, welcome. How do you look at the appreciation of the Indian rupee in last 2 or 3 sessions? What would you give it to?
Hi Manisha, good evening. Well, I think temporarily looks like 55.50 has been capped, and with the new news of the fiscal deficit coming lower slightly, they are managing to bring it lower by bringing in disinvestment of about half a dozen of PSUs. And this is one of the positive things which we think in going ahead. Also, the railway fare hikes, and also followed what possibly could be a diesel price hike. And there were also reports in the media that oil ministry might tell the oil companies, the oil refining companies, to sell diesel to the bulk purchaser at a market price, which price could be fixed every fortnightly. These reforms might give a boost to a slight boost to the reforms, to the value of the rupee, which we saw in the month of November when the rupee, after the reforms in November 16, we saw the diesel price hike followed by the FDIs in the retail. The rupee went strong by about around 1 to 1.5%. So similar procedures we may see now also, with temporary rupee capped at 55.50. We could slightly see the rupee appreciating by March or maybe by budget towards 53.5.
So today, what kind of cues would you get from the international markets? Because we've seen the dollar decline. The ECB meeting is what the markets are awaiting. The Bank of England, of course, hasn't changed anything. That is pretty much the expectation from ECB as well.
Absolutely, Manisha. But most important thing which I would like to tell you is that we all know the rupee in the OTC market and in the futures market is being traded between 9 and 5, and we should also know that rupee futures are being traded in the Dubai market for 16 hours a day, our 8:30 in the morning till 1 in the midnight, and today's daily volumes is approximately around $3 to $4 billion. I'm also given to understand that even effective 28th of January 2013, rupee futures will be traded in the CME exchange. So having said that, I would rather look at a very highly volatile rupee in this 2013, and it could go sideways. So it's absolutely a time where in the international market where RBI has hardly any ammunition to track the high volatility there. Corporates in India, companies in India would need to have their risk management policies in place to get so that they are not affected by this huge movement in this rupee.
Mr. Dey, going forward, which fundamentals would you want to watch out for? Because of course there are concerns in the Indian markets. You said they were softening a bit, but what about the international markets, the capital inflows? That is something that India would continue to look forward to.
Absolutely. You see, normally if you see in the beginning of the first couple of months, we see a little bit of good inflows coming in, and also historically also we have seen Jan to March the rupee remains slightly stronger. So maybe going ahead in the second quarter, we may see again CAD coming into effect. As of now, the CAD looks to be slightly under control, though it is still pretty bit high. But yeah, as you said right now, looking at international like the dollar euro levels or the level of how the dollar behaves in the international market, but the rupee flow will definitely depend upon especially the flows from the FDIs, the flows from the FIIs, the flows coming from the ECB. NRI would be a little bit support to that, but definitely the capital flows are most important to keep the rupee under check here.
Vijay, getting you in the conversation as well, if the economy does start to, recover in the global markets, in the developed countries, wouldn't they rather keep those inflows with them, or do you think the inflows could keep coming into the emerging countries, India, in that sense too?
Manisha, historically speaking, the FIIs have come into this country in 1991. We've seen whenever their market basically witnesses a boom or a very strong, reliable upthrust, the tendency is to keep money closer to home and reduce inflows into frontier or emerging markets. I do expect that also to pan out here. I'm not saying that inflows will either stop or reverse, but I'm saying is that the expectation of robust inflows that we are banking on and pricing the rupee-dollar peg into might just get tapered down a little bit. So I do expect the U.S. markets to pick up, and if U.S. markets are to pick up, I think FIs would basically tend to keep money closer to home rather than deploy them here.
Also, Vijay, what's your sense now for the last day of the week tomorrow for the range?
I think in the future segment, the rupee has seen 3 days of continuous appreciation. So if I was to get the US dollar close to 54 and a quarter in the cash segment, I would not really mind going out and buy some just for a technical pullback in the dollar on short covering. So I would expect something like if I was to get the dollar at 54 quarter, 54.30, I would buy there expecting to be able to sell at 54.65, maybe 54.80.